Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Friday, January 6, 2023. Please click like and subscribe if you would, and share the content with friends and colleagues. Would appreciate it a great deal. So, start out with the big picture. I like to start out with the big picture. About 3-4 weeks ago, we settled below a long-term support region, presently 161.63 to 169.74. That set off a 3 to 5 week sell signal down to our next support, which we tested in about 2 weeks at 101.16 to 112.86. We are in this zone still. This is a near to midterm bottom picking zone of support. As I've been saying, this is the area to be or go long in if your time frame is typically 2 to 3, 3 to 5 weeks, a couple of months. This is an area where the market can grow oversold on a monthly basis, and from here we can rally back into this zone of resistance between 160.63 and 169.74 by the end of February or sooner. And this zone dropping gradually represents a long-term ceiling. So there is the scenario that where we are now, that midterm support in the 101.16 to 112.86 region, we can rally from here into the low 160s to upper 160s, and from there fall off again back to new lows perhaps as we move into February-March trade. As I've been saying, in terms of long-term investing in Tesla, my recommendation would be, well, in any event, you've got a green light for that. If we were to close any week above the 169.74 area, and then I think we've got a good low probably through 23. But until then, this market remains on its heels long term below 169.74. So that is the big picture. And now we're going to zoom into what is really this chart here. We're testing the 101.16. We haven't tested that number yet, but we slipped inside that zone that I showed you that begins at 112.86, a mere minor point today. 120.36, this is kind of like your 3 to 5 day time frame into later next week. 101.16 support, 120.36 resistance. I'm keeping it as session containment only. Under other circumstances, a 1 to 2 week channel top like this deserves to be weighted as a 2 or 3 star level, able to contain 2 to 3 day highs, weekly highs, and from there we could fall back into the 101.16 region. Now, that may play out. If we test 120.36 over the next few days, it just may contain buying through all of next week, and from there we could fall back. But because of the fact that we've tested the midterm support area that I showed earlier in the 101.16 to 112.86 area, this market remains primed for meaningful recovery back into the upper 160s. And so that remains the idea, and that therefore I'm keeping 120.36 just session containment. Very well suited for day traders, and if settled above swing traders into the lower 140s within probably 3 to 5 days, and that targeted 169.74 probably within 2 or 3 weeks once we close above 120.36. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. So let's take a closer look at the day. And this is kind of a zoomed in. So these are, if you look here, I've got my support and resistance levels lined up, and I've got soft intraday pivot points at 114.59, which is Wednesday's high. That is the pullback high following Tuesday's all-time low for the year. How's that? The move low following the all-time high from about a year ago, right? So this is the lowest the market has been. I believe that's the 104.64 level. And 114.59 is our upward pivot point. So if we push through Wednesday's high, we should, within the day, test this 120.36 channel top, where we can place a daily high, possibly into middle to later part of next week. And if settled above, once again, pretty classic buy signal, whereby I would expect the 140s. This number is wrong here. It's not 146.08. I'll show that in a moment. It's 140.22 to 143.78. This becomes a 1 to 2 week target, and we could, over the next 2 to 3 weeks, continue all the way into the 160s if we close today, for instance, above 120.36. Downside today, I have 107.62. That is nothing more than a simple trend line off all the highs over the last few weeks. We did not test it on Thursday. We came very close to testing it. So it's yet to be tested, actually, because it's based on this point here and this point here. And so while we've approached it the last couple of days, we haven't even tested it. And it's 107.62 today. And if we open today above 107.62, it can contain early day selling pressures, and above which I would expect 114.59. Pushing through 114.59, 120.36 in reach today. Now, if we break or open today below 107.62, we should test that 101.16 channel bottom. Once again, this zone, 101.16, where we could bottom out through January into February, and once again from here, the 160s in reach over the next 3 to 5 weeks. I did want to show the 140s. If we close today above 120.36, these convergent trend lines in reach by the end of next week. If we close above 120.36, the 140.22 to 143.78 region, two convergent long-term trend lines able to contain weekly buying pressures when tested. And you can see that here I have them weighted as 3-star resistance. And this is the area that, if settled above, should then yield the 169.74 formation within another couple of weeks, where we can actually top out through February, possibly the balance of Q1. So let's talk downside once again. We might close today below 101.16. Sorry, wrong chart. We might close today below 101.16, this longer-term channel bottom. And if so, 72.96 in reach. And these numbers haven't been updated to the downside. I don't think it's necessary just yet. But we've got, where is 72? Here we are. 79.60. So you can see that here. I don't expect to see this today, but I'm just outlining a scenario. And in fact, I don't see longer-term bearish continuation. By that, I mean into February trade, unless we do close today below 101.16. And if we close below 101.16 today, I'm going to say 79.60 is a probable 2 to 3 day target. And over the next week or two, this 72.96, a 3 to 4 month descending channel bottom, which I have weighted as a 3-star support level. So closing below 101.16 today, we have a 2 to 3 week sell signal to 72.96. That's dropping at a pretty decent rate. And as I've been mentioning, it actually converges over the next week or so, week or two, with the 64.59 pre-COVID high, this January 2020 high that you can see here. I've got little points shown here all the way down, 91 even, by the way. That is an area that may be bumped up to a session containment level if we happen to close below it today. But I don't expect to see that today, actually. It might. We may close below 101.16, but until we do, this is a bottom-picking zone, as I say, and I'll continue to say and continue to be repetitious, that above which the 160s in reach as we move into February trade. And I think I have said all there is to say for Friday's Daily Tesla Report. I'll be back on Sunday afternoon with Monday's report. You have a great weekend.